Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate speak so you don't have to. Today, we're diving into the exciting world of innovative solutions and support, Inkl's or ISSC's latest quarterly report. Get ready for a roller coaster of numbers, because this report is like a flight simulator. Lots of ups and downs, but hopefully, we land smoothly in the end. This is their Form 10Q, which is basically a report card they hand in to the Securities and Exchange Commission every 3 months. Think of it as a pop quiz on how their business is doing. For the quarter ended December 31, 2024, we're looking at the ups and downs of their sales, costs, and overall financial health. Were they soaring or stalling? Let's find out. First up, the balance sheets. This is like a snapshot of what the company owns, which are assets, and what it owes, which are liabilities, at a specific point in time. Think of it as a financial seesaw, assets on one side, liabilities and shareholders' equity on the other, always trying to balance. As of December 31, 2024, ISSC had total assets of about $81.3 million. That includes things like cash, accounts receivable, or money people owe them, and inventory or stuff they have to sell. Looking back at September, it seems like they had $82.4 million, so roughly they have remained stable. But let's not worry too much here. A few million isn't worth spending too much time on. The important thing is things are going well. Next, we're checking out the income statement, which is like a video showing if ISSC made or lost money over a period of time. It adds up all the money coming in, that's the revenue, and subtracts all the money going out, those are expenses, to see if there's a profit or loss. For the 3 months ended December 31, 2024, ISSC had net sales of about $16 million, which is awesome because they sold stuff. Now the cool thing is, that's more than the $9.3 million they sold same time last year, so they're actually doing better. But what does that mean? It means folks are buying their things. Next, we need to take a look at the Statement of Shareholders' Equity, which details changes in the ownership value of the company. We can see how much money is put in by shareholders and how much is used. We can see in this period that the total shareholder equity has increased. From the end of September 2024 to the end of December 2024, about $1 million was added into shareholders' pockets. We can see that, for example, with share-based compensation, that's when you pay with shares, as well as net income, which adds up all of the money and subtracts what was spent. Now, let's talk cash. The statement of cash flows is like a bank statement showing all the money coming in and going out of the company. This shows how ISSC is handling their money. For the 3 months ended December 38, 2024, ISSC had net cash provided by operating activities of about $1.8 million, which is the money they made from doing their normal business things. Investing activities used up about $0.3 million to buy new equipment. Lastly, they used $1.5 million in financing activities that involves the line of credit. Alright, now for the fine print. The notes to the financial statements give extra details about how ISSC does their accounting. It covers topics such as acquisitions, and you have to always keep an eye out for when companies do this, because if they get out of hand, the companies won't do good. Also, a point to remember is that the company does use estimates. Estimations are used in accounting for, among other items, valuation of tangible and intangible assets acquired, like goodwill. So when you see words like estimations, be careful, because that means the company is saying, we think so. If the estimations go wrong, things could be bad for the company, because it may cause their revenue and profits to decrease. Now, here we can see that the basis of presentation for these quarterly financial statements doesn't include all the info and footnotes you'd find in the full year-end report, and all of that info can be really long. Also, the results for these 3 months might not tell the whole story for the whole year. So what we see is, we have to remember it's just a quick look, not the full picture. This section explains how ISSC handles goodwill, which is a term used when one company buys another. Think of it as extra value that you can't really touch when you buy something, and they will have to test it. These tests are what are called impairment tests, and depending on if the company actually does well or not, it may have to write off some of these numbers. So something to definitely pay attention to when companies purchase each other. Now, we will take a look at fair value. Since these are estimates, we can never be too sure. The company has what are called levels to measure their fair value, and depending on what level of the fair value, we know how confident we should be. Revenue recognition is all about when and how a company records revenue when it sells goods or services. It follows a 5-step process: finding the contract, knowing what they need to do, determining how much it will cost, sharing the cost, and knowing when it all comes together so revenue comes in. This is because not all money is equal, because you could have received money to do a job, but if the job is not yet complete, that money doesn't belong to you yet. Keep in mind that when a company takes payment and doesn't deliver, it goes under contract liabilities. It's like they owe that amount to someone, and you can find it on the balance sheet. Also, under this, we have contract estimates. You know, because estimates must come in handy everywhere. Keep in mind that everything can impact a company's profitability, so you have to take extra precautions. What happens if one customer is responsible for more than 10% of the income or sales? If that is the case, then we consider them major customers. Why? Because this means a huge portion of your earnings depends on that major customer. As they say, don't put all your eggs in one basket. With that, for the 3 months ended December 31st, 2024, 3 customers made up the majority, nearly 40% of their business: Lockheed Martin, Boeing, and Pilatus. If Boeing stops buying, then you know it's going to be rough. But if things go well, then life is good. As a heads up, the FASB is making some changes about segment expenses which will be important to monitor. In September 2024, the company acquired products from Honeywell, so this meant that the two are now a company. Because of this, we can see how much the company is going to pay to acquire all those assets. That's called purchase price allocation in the financial statement. Since these Honeywell acquisitions are still fairly new, the numbers might change, but the good thing is, it'll only be temporary, and it'll be settled. Then after the transition services, they did a test and found out where is all that extra money going to go in case there's less liabilities than they expected. It all sounds like good and normal stuff. Here we can see the difference between the tangible assets which you can see and intangible assets, things like patents that you can't. As of right now, the intangible assets are license agreements and customer relationships. Now, let's move on to what the management thinks about all this. I think this is the big picture as opposed to all the numbers. But remember, there's also a cautionary statement where they remind you that, because it's all about the future, they can't be 100% sure about anything. The operations are exposed to market risks. Because the interest rates can shift, it can make the price go up and down. Here's my take on innovative solutions and support. They are steering the ship in the right direction because they've increased their portfolio. It may not mean much at first, but the potential is definitely there with time. Valuation. To be honest, finding an exact valuation is tough with all those recent acquisitions changing things. But what we can clearly see is, it may have a bumpy road ahead. Recommendations. Overall, I'm neutral. There is a lot of potential with this company, so they are definitely doing the right things. So if you are patient, check it out. I'd say the best range would be between $7 and $9. Thanks for watching, and please subscribe so you never miss an episode.